this. Okay, so this difference is greater than 8, and this is the current month expiry. So this will be 0 and should be greater than number 8. All right. So let me just explain you what we just did over here. So first of all, we created a condition where the position of close instrument name MCX crude oil minus current month 5-minute candle was has closed above the previous super trend candle of 10.3, and then before that the -2 candle was below that super trend, right? So close was below super trend, and there has been an upside crossover, and that the days difference that today and futures expiry of crude oil should be greater than 8, because brokers don't allow us to trade in crude oil future just within the last week of expiry. So that's the reason why we put this condition over here for the entry of the first set. So I will just close this now, and I will put the position. So for position builder, what we will do is we will select MCX as the exchange. Type will be futures. Again, we will select crude oil. We will select this as a positional strategy. Suppose you can just put it as an NRML, or you can choose MIS also as per your liking. You can the expiry will be current month, and in the since this is a future, we will select lot, and I'll just put 1 lot. All right. So this is the basic entry condition. Now again, for the exit condition, what we will do is we will just copy this particular condition from here, and we will paste it here. All right, and we will change the sign because it's basically exactly the opposite, right? So what we want to do is whenever there is a super trend downside crossover, we want to exit the open position and then take the, but from here we will delete this days difference condition because we don't need it in exit. We only need it in entry. That entry should be controlled whenever the days difference is in the range of 8 days. So over here, so what we will do is we will simply change this signature. So this less than, I will bring it over here. I will drag it and bring it over here. And this greater than, we will simply drag it down over here. So what we did was now this is the downside crossover, that the close of super trend is now below the super trend of the previous candle, and previous to previous candle, the close was greater than the super trend value. So this is the downside crossover that is happening. So when there was an upside crossover, we basically created a condition that it should buy. And similarly, when there is a downside crossover, we will basically sell this particular option of future lot of crude oil. After this, first of all, let me just save the strategy, because every time we create a particular condition, it's important to save it, because if we don't save it, then if the internet goes off, then the strategy will not be saved, and we'll have to do it again. So that's the reason why we just saved it now. Now for the second set, what we will do is we will exactly copy this particular condition, because this is for the buy position. Similarly, for sell position, it will be exactly the opposite. So I will just copy this downside crossover, and I will paste over here, and I will change this to and I will just add the days difference condition over here as well, because even in case of downside crossover also, we want to make sure that the days difference between expiry and today should be greater than 8, right? So days difference today and current and MCX future expiry. So today again will be MCX, and MCX future expiry will be crude oil. Crude and current month expiry. Current month expiry should be greater than number 8. All right. So this is basically downside crossover, where the close of the candle has closed below the super trend value, and the previous to previous candle was above the super trend value. So this is a downside crossover, and we will create this as a sell condition. So over here, I will just select sell, MCX, futures, crude oil, NRML current month, and what I'll put this as lots as 1. because it's the futures that we are trading in. So I'll just close this. So this is the short side entry, short side condition, entry condition where there is a downside crossover in super trend, and we will exit this position by whenever there is an upside crossover again. So from here we can again copy this particular entry condition of the first set and paste over here, because we want the upside crossover, right? That whenever there is an upside crossover again, I want to simply exit the trade that is short one. So I will just delete this, and this as it is, we have an upside condition that is already made over here. So this is how we basically first create the entry for the current month contract. All right. Now in the second, now in the third and fourth sets, right? What we will do is we will create a condition that during the 8 days of within the expiry for crude oil or MCX, we will take the trade and check the conditions in the next month contract. So that we will do in the set number 3 and 4. So now set number 1 and 2 is done. So we'll move to set number 3 now. So for set number 3, what we will do is, first of all, we will check. So let us create this condition, the position close of the previous candle. All right. So 5-minute candle, again, we will select over here. Instrument name, again, MCX, crude oil. And over here, we will select the next month, right? So first of all, we will select current month. And in this, the expiry, we will select as 1, because we want the 0 expiry is current expiry, but which is by default, it is selected when we select current month. But since we are now checking the next month expiry, we will select this as 0. Sorry, this is 1. So this is the next month expiry that we are checking the condition on. So this is how we select basically the next month expiry in the condition builder. All right. So now position of close is greater than position super trend minus 1. Similarly, what I will do is I'll just select 5 minutes as the time frame. All right. The instrument name will be MCX, then crude oil. Again, current month, even if it's not coming over here, we'll see it over here. And 1 is the expiry. That is the next month expiry. So this is the first condition. So whoever this is, please do not use your. Please do not use this while the session is on. At the same time, what we will do is we will simply create another condition now for downside crossover. All right. So what we will do is, again, I'll just copy this, paste over here, and it should be less than. First of all, let me just change the candle to -2. And again, we will put the super trend should be less than, again, -2. So what we did was, basically the current candle of the super trend of the next month contract should be greater than the super trend value, and the previous to previous candle, -2 candle, should be less than the super trend value. So we will just submit this, and also we will add one condition, that is the days difference. Now in this case, the days difference will be exactly the opposite. So days difference today and MCX future expiry today, MCX crude oil is less than or equal to 8. Number 8. So whenever the expiry of the current month and today, the days is between 8 or less than 8, then it will automatically start checking conditions in the next month contract and it will also take positions in the next month contract. The way to do it, we will see it now. All right, so this is the third set entry condition for the next month entry. And what we will do is we will just buy the particular option. So over here, what we will do is we will select MCX futures, underlying will be again crude oil. The expiry over here, we will have to select the next month expiry. So for that, we will have to put a formula. So FX, what we will do is I will select MCX future expiry over here, MCX future expiry, crude oil, and we will select next month expiry. So 0 is current month expiry, 1 will be next month expiry. So that's how we select the next month expiry as the contract that we want to trade in. And over here, we will select lots as 1. So this is how we add the next month contract for entry in the third set. All right. Now, similarly, we will just create an opposite condition for exiting this particular trade, right? So what we will do is we will move to the exit condition, and we will simply copy paste this, since we don't have to do this again and again. I will just paste it over here, and I will simply change the signature. Now we don't want the exit days difference in the exit condition, so we'll delete this part and we will change the signatures over here. So what I will do is I will just simply copy this and paste it over here, drag it over here, and I will simply copy paste and drag it over here, and I will delete this. So this should be less than, this should be greater. So what we have done over here is that now the since we entered in on the upside crossover, whenever there is a downside crossover like this in the same contract, then it will exit this particular the bought future of the next month contract that we took entry in the set number 3. All right. So this is set number 3. This is done. Now similarly, we will do a short side position in the set number 4. So what we will do is I will simply again copy this, because this is essentially the exit of first set should be the entry of the exit of the third set will be the entry of the fourth set. That is the short position. So I will just paste it over here, and also I will add the days difference keyword over here, because this is the entry. So in entry, we want the days difference to be less than equal to 8, right? So I will just add that condition. So days difference between today and MCX future expiry. Again, today will be MCX and underlying will be crude oil. Crude oil should be less than or equal to number 8. All right. So basically over here, we are checking the downside crossover of this particular parameter. So the close of the super trend has closed down, and there is a downside crossover, and the days difference between today's expiry and today is basically 8 days. So now what we will do is we will put a sell order. So for that, we will select again MCX futures, NRML, crude oil is what we will select. Current month. So over here, we will have to again use the formula of MCX future expiry, crude oil, and next month expiry. So this will be the expiry formula, and here we will select lots as 1. So this is basically the entry of the short position when the expiry is within 8 days. And what we will do is, again, we will create an exit condition, which is nothing but the entry of the third set, right? So we will again just copy this. That is basically the upside crossover. Will be the exit of the downside crossover. So we will just close, delete this part, and this is essentially our upside crossover of the next month contract. That whenever the close is above super trend, at that time it will exit the short position. So that's how we will do it. And at the same time, we will just put one universal exit condition that whenever the time is, say, the time And in this case, the time should we have to select MCX, not as NSE or anything, because NSE time is still 3:30, but MCX is still 12 o'clock, right? So as whenever, if for example today time is greater than say I want to equal to number around 22, that 10:50 I want to suppose they exit it. Then what I will do is I will just put the number 22:50. All right. And also, if I want to add another condition that, you know what, along with the time, I want to exit only on, say, MCX expiry day. Then what we can do is we can just put it as today is equal to MCX future expiry. And this is just an example. I'm just giving an example. In this case, if you, for example, want to trade on a particular expiry day, then this is how you have to do it. But since we will not be able to trade within the 8 days of the expiry, they probably will not need this. But this is how to construct it. So we can say that if it's an intraday strategy, you ideally want to exit it at say 22:50, then you will exit it at this time at 22:50, that is 10:50 in the night. And then after that, what I will do is I will reactivate this strategy after 6 hours. So automatically at around 5 o'clock in the morning, after exiting at 11 o'clock, it will automatically reactivate, and the next day it will start checking the trades. And if it's an intraday strategy, it will work in that particular cycle. Also, it's important to know that we have to select this condition check as continuously if you are in any of the paid plans, because what happens is that the condition check, if you keep it as 1 minute, then there will be a delay of 1 minute in condition checking as well as taking trades. So there can be slippage because of that. Whereas continuously, it will check the conditions every second, and there will be minimum slippage. So this condition is basically start condition check after exchange open. So since MCX opens at around 9 o'clock, if you want to start taking trades only after 9:10, then you can keep it as 10 minutes, or you can adjust the time accordingly. Also, at the same time, if the MCX market closes at 12 o'clock, then last condition check before exchange close, if it's set to 10 minutes, then at 11:50, it will stop checking the conditions. You can adjust the time as per your liking over here, and we will stop checking the conditions before that particular time. And then after that, you can just update the strategy. So this part is done. So now once we have created this particular strategy, let me just explain you what we did in an entire strategy. All right. So just I'll check the questions later on. Just 1 second. It's been different between repair once and repair continuously. Okay, all right, just 1 second. So basically in this strategy creation, what we did was, first of all, in the set 1, we created an upside crossover of super trend of crude oil. All right. So over here, what we did was, whenever there was an upside crossover around a 10-3 super trend from -2 and -1 candle, we checked the days difference should be greater than 8 between the expiry and today. Then only we will be taking the trade in current month future contract of crude oil, as shown in this particular image. All right. So this is the current month expiry, and then we will exit it whenever there is a downside crossover. All right. So whenever there was a downside crossover, as shown in this particular image, so whenever there is a downside crossover like this, the close is below the super trend, then in that case, we will exit the long position that we have taken. Then in set number 2 also, set number 1 is for the long position. Similarly, for set number 2, we will also check whether there is a downside crossover, and we will enter if the days difference is more than 8 between today and expiry, and we will take a short position in the current month contract. So once this is done, after that, we will exit whenever there is an upside crossover in the current month contract. So the first 2 sets are basically for the current month contract that we want to trade just 1 week before expiry. And then in the last week of expiry, whenever there is just the days difference is basically less than 8, then we want to start trading in the next month contract. So that is the reason why in the instrument name, as we saw over here, we have selected the next month contract, that is nth expiry is 1. And we have seen that whenever there is an upside crossover in the next month contract, and the days difference between today and current expiry is less than 8, then only we want to take a trade. But in this case, we are taking a long trade in the expiry of the next month contract. As we can see, MCX future expiry, crude oil, next month contract. And at the same time, we are exiting whenever there is a downside crossover in the next month contract itself. So we are not confusing ourselves between the current month and the next month when there is a separate set. All right. Similarly, on the short side, whenever there is a downside crossover in the next month contract, and the days difference between the two is less than equal to 8, then in that case, we will basically take position in the next month contract on the short side. So as you can see, all the parameters are the same, just that the expiry is again the next month contract. So we will close this also over here. And we will also set a condition that whenever there is an upside crossover in this particular contract, then at that time, it will basically exit this particular position. So that's how we work. And at the same time, whenever there is a universal exit, we want to, suppose if you want to exit the trade at around 10:50 in the night, we can set the time as MCX is greater than 20 to 50. And we can put the PNL condition or anything that you like as per your liking. All right, so if you want to put this, for example, a PNL condition, you can just put it in OR. That suppose whenever my PNL is say greater than equal to number 5,000, then this will be my target that it will universally exit. Or whenever there is a stop loss of say stop loss as hit of number 2000 minus 2000, then I want to exit it based on this particular stop loss. So that is how you can create these different conditions, and you can just simply update and deploy the strategy. So once you have created the strategy, you can basically go to your My Strategies section. So this is where the strategy will appear. You can go to My Strategies section. As you can see, this is the strategy that was created right now, and you can simply click on deploy and whichever. So this is, currently I don't have a MCX plan active right now. So that's the reason why it's basically giving me that error. So you can be able to deploy a particular strategy in paper trading whenever you want to deploy this strategy according to that. So now I'll just start taking a few questions. Get a call. So yeah, so I can arrange a call back for you, sir. Not an issue. So let me just note this number down. Yeah, all right. All right. Please explain the difference between repair once and repair continuous. So repair once, what it does is, so there is a block that we have written over here for repair once and repair continuous. Repair once and repair continuous. Yes. So once you Google this, right? So see, this is basically the blog over here. You will get all the details of what is the difference between repair once and repair continuous. But to just explain you in brief, repair once is basically when you want to just repair only once, right? So as the name suggests, right? So for example, if you entered into a call option at 100 rupees, and if you put a stop loss of 20% in repair once, then it will exit that particular entered call option whenever there is a stop loss that is hit at 20%. All right, so that will be just one-time activity. But repair continuous is used when you want to re-enter again into that position and again hit a stop loss of 20%. Again, if you want to re-enter into that position and again if you want to put a stop loss of 20%, then in that case repair continuous is used. But the way to use it and how to use it is basically explained in this particular blog. So once you try it out, then you will understand. So that is the thing. Please, I want to know how to take profit 0.05% condition in USD INR. So you can just 0.05 paisa condition. Okay. So you can send this condition to you, this thing support@Tradetron.tech, because there should be a specific coding for the 5 paisa. Because yeah, CDS is slightly different as compared to other this thing, because in options in crude oil, etc., you can put a percentage wise stop loss, but for USD INR there will be a separate coding that might be needed. So you can just write to support@Tradetron.tech and our team will assist you in that. Okay. Next is also I want to know about the trailing stop loss. Should we trail 1:1, means every increase in profit by ₹1, trailing stop should be 1, or we should be use a higher number? So that is very subjective, right? So it depends on the trailing stop loss that you want to set for your strategy. So for example, if I just go to this particular strategy that I created, at the bottom, if you want to create a strategy level trailing stop loss, you can use this particular option. So for example, if I put just say 1,000 rupees as the activated time, then whenever my profit reaches 1,000 rupees, then at that time the trailing stop loss will be activated as 0. So, and if I put say 1 point and 1 point, as whenever the profit increases by 1 point from 1,000, the TSL should be increased by 1 point. So what it will do is, whenever my profit first of all reaches at 1,000, the trailing stop loss will activate at 0. After that, if it starts increasing by 1 point, so it goes from say 1,000 to 1,100, then my trailing stop loss will move from 0 to 100 because it has moved from by 100 points from 1000 to 1100. If it goes from 1000 to 2000, since we have increased the profit by 1 point, so from 1000 to 2000, then automatically the trailing stop loss will be down at 1000 rupees. Since our total profit right now is 2000 and we have activated this at 1000. So basically, if the profit reaches 2000 and if it starts coming back from that particular level, then automatically at 1000 rupees the position will be squared off, because that's how you have to set the trailing stop loss. That's how it works. All right. Entry on breakout and retest condition. So code entry on breakout and retest condition. So yeah, so there is another video on opening range breakout. So even this video will be uploaded to YouTube. So you can basically basically watch our YouTube channel any point in time in order to get to know what kind of videos and demo sessions are there. So over here, what you have to do is you can just say range breakout. So we had a session previously on how to create a range breakout strategy. Like, if you want to take a trade only when there is between 9:15 to 9:30 candle. After that 15 minutes, whenever the high or low breaks, then in that case you want to take an upside or a downside trade. So that you will learn in this particular session that we have had. So you can watch this video to understand how to get the breakout and that kind of a condition. So it can be created. That's not an issue if in the extra condition. So yeah, so there is entry we made. Yeah, Heikinashi also can be done, sir. So for example, in edit strategy, right? If I just put and add another set and just put say position close, all right? So say -1. And if you want to select Heikinashi candle, over here you can select Heikinashi. All right. So this is how you select Heikinashi candle of that particular instrument that you are trying to select. So that's how you can do that. So Heikinashi also we have here different strategy type of this thing also. Conditions also available. Can yeah, open Heikinashi. So yeah, you can do that, right? So basically the condition that we just created over here. Oh wait 1 second. Let me just do it. Position open. So instead of close, you will select open. And again, once you click on open, you will put symbol as Heikinashi. So this will give you the Heikinashi of open Heikinashi. So this is how you can create different kind of open, high, low, close, whatever you want, you can select according to this. So here you will have open, high, low, close, or whatever. High, low, like this is low, etc. So all of those conditions are available over here. All right, I think we are done for today's session. If you have any questions, you can just simply write. So yeah, so one more important thing that I want to tell you before this is the resources that we have, right? So you can watch these videos over here. You can search any video that you want. So for example, if I just type say super trend, then what I will do, what will happen is you will get the video on super trend. At the same time, we have this keyword documentation. So whatever keywords that I used today, right? Say super trend or any of the position close, etc. All of those keywords and all of those syntaxes are available over here. So what I will do is I'll just say select super trend, right? So how to use this keyword and how to construct this. All these examples are given over here. So if you want to use say today's conditions, this keyword how to use. Then also if you want to use say volume series parameter. So for volume, then this is how it's to be constructed. So for each and every, so WMA suppose parameter, right? And if you want say, so that is how it is to be created, all of those examples, including VWAP. So all of that is available over here. So you can watch the, you can check this page out, that is keyword documentation. Also, you can watch our videos. And if you have any questions, you can also get in touch with us on chat from 9 a.m. to 12 a.m. in the night for about almost 12 hours. And at the same time, we are also available on call. So if you want to contact us, you can contact us on this number. In contact us, there is this Mumbai call center number available. You can call us on this number, or you can also raise a ticket by using the support ticket link. Whatever detailed query you have, you can raise a ticket and our team will respond to you within 24 hours. So that is the support center that is available. If you want anything else, you can just get in touch with us. My super trade strategy 5-minute time frame and USD will take trades sometimes continuously and sometimes just 1 or 2 trades. So we will have to check the conditions and the data that is there, right? So basically, based on that, it depends how volatile the market is, and according to that, it will take. So in notifications log, it will automatically show you what kind of trades it has taken and things like that. So you can ascertain based on that. So you can get in touch with us on our support, and we will explain you what is happening. If I want to repair multiple times in the same strategy, same set, should I use? Yes. So if you want to repair again and again, one time entry and again exit again, if you want to enter again, then in that case, repair continuous is used. All right. So, but repair continuous is normally used with net quantity keyword, because if it's already taken one trade, you don't want it to take again and again just because it's repair continuous. So it will take, instead of one lot, it will take 1, 2, 3, 4, 5, 6, and it will continuously keep on taking. So you have to make sure that the net quantity is 0 when the repair continuous is triggered. So basically, only when if there is a net quantity that is already not present of that particular, no, not positions detail. I'm talking about the net quantity. Position detail is equal to 0 will take basically, it will stop the condition, it will not take another entry at all. Position detail is to restrict this thing, the entries totally, but net quantity will not like restrict the entry. So for that, all of these blocks are available over here. Let me just take you to Q&A.Tradetron.tech. So if you want to know how to use the say positions detail related keywords, right? So what you can do is you can just simply click on this and you can just write positions detail. All right. So positions detail, all of these examples of different position details are available in this thread. So you can watch these videos and you can also watch this, read this particular blog for different examples. At the same time, if you want to use say the quantity, the keyword that I talked about is net quantity. So this is the important keyword. So this is the thread on that net traded instrument and net quantity. Over here, you will find different examples of how to use net quantity. So in your case, when you want to repair continuously, net quantity is the keyword that will be useful to you. So you can go through this particular link and automatically you will be able to understand how to do that. All right. So net quantity for 2 lots for Nifty, that is correct. Yes. So then net quantity will be according to that. No, Nifty will be minus 100, correct, right? And for Bank Nifty, it will be minus 50. So it's like that. All right. We are almost done with the time. I hope this was a good session, and I'll see you next week again. All right. Thank you very much. Yeah, bye.